Joining me now to break down what we have seen in the market scene at midday is Odwa Magwentshu from Momentum Securities. Odwa, thanks so much for your time this afternoon. And I think we have to start with the big news out from Germany this afternoon. Now, the CDU's Friedrich Merz, as mentioned, has failed to get enough support to become the Chancellor in a parliamentary vote. Another setback for the German government. And just your general assessment of that move and what that political move may mean for stability and investor sentiment when it comes, to Germany as well. We've also seen, growth really downbeat from that side.
Yes, Germany has been going through quite a bit as the leading economy in the Eurozone. We saw with the election, it was also a very tightly contested election. So it is not too surprising in terms of the not being able to meet all the votes.
Yeah.
However, there's still two more votes that are still to come, expected next week, Tuesday, for the next one. If you also look at, the tally of the votes, very close. They were he was just 6 points away, or 6 votes away rather, in becoming councillor. So I think for me, for the economy everywhere right now, because of the elections last year and this year, there is a change in governance across the globe, and there's a lot of patience that's needed. I mean, we can genuinely relate as South Africa as well, still haven't pushed the budget as yet. There is some changes coming through, and it gives a hiccup in this moment. However, it doesn't. It's not too dire for me at the moment.
And I like how you made that comparison between what we've been seeing playing out here at home and in Germany, and both countries really being hit by downbeat political sentiment. We've seen what's happened with the rand. We've seen what's happened with the JSE, even though it's been resilient, and we're seeing that playing out in the German DAX. Today, as I read, it's down over 1%. Let's shift focus to some earnings news. Odwa, fashion retailer Hugo Boss posted better than expected Q1 results, pointing to cost control measures. However, their outlook quite downbeat. They flagged a tough consumer backdrop. Not a surprise, I guess.
Very much so, not a surprise at all. Retailers, not only in South Africa, but internationally as well. But if you look at their results, it was looking overall good, as you said, beat expectations. However, it's still down from last year. So that's why I think that the outlook does come out a bit dire than expected. Because right now, as you say, people are counting their cents, and fashion or luxury brands, even though this doesn't really fill that particular point, it's not too great. However, the outlook on their side, besides the macroeconomics looking down, they are looking to put in some things in perspective in terms of trying to move forward. One of which is that they've got a campaign with David Beckham they're looking to announce in June, so that to try and add some stimulus or catalyst in terms of the growth of the businesses. And one last thing, they also, if you look at where they're not doing too well, online is where they're actually doing quite well, let's say beating estimations or growing in that front. But brick and mortar for wholesale and retail, they are losing ground on that front.
A really tough industry to operate in because, we are in a tough economic environment and consumers are looking for bargains. Moving over to Alphabet, something caught my eye today. They've been under fire for a hot minute, Odwa, and this time around the DOJ has proposed that Google divest its ADX advertising marketplace and AD server DFP. This, of course, following the showdown we've been seeing between the state and Google over its monopoly in the search unit. What have you just been making of the moves playing out there and what the possible divestments could mean for the future of Alphabet?
Alphabet, all the tech giants have been currently being scrutinized quite aggressively with regards to antitrust laws and perspective. And the dominance in the search engine environment has been a staple for them. And right now, I think that, they do need to find other measures or find ways of being more innovative in terms of where they get their money going forward. It has worked for them. For example, if you look at also on Androids and iPhones, they were the default search engine. And so they're working towards that to also, I think, for the consumer, I think this is a good thing. For the business, it just needs them to be more innovative in terms of finding other opportunities.
All right, and moving over to the mining sector, Goldfield says it's on track to meet its full-year guidance. Production is solid as most of its sites increased output. I can't say anything bad about this update. It's really, really upbeat.
Goldfield has been busy this week.
Yeah.
Yesterday, announcing a nice acquisition, looking to expand its production, pausing in Ghana. I think it's also beneficial for them in terms of the regulations. They still need some things to be ticked there. However, coming back to the operation update, as you said, the high single-digit numbers growth across the board in terms of production, and at these elevated gold prices, that is nothing but beneficial. The business still has a very good balance sheet, obviously stated with the purchase outside. I think, right now they are very well positioned to benefit from these elevated levels. And they've been doing a very good job with maintaining a good balance sheet. And as you said, nothing to fault at this point.
Yeah. Let's hit pause on that conversation, Odwa. Before we move on to your stock pick, let's take a moment to touch on some counters that have been attracting interest from your industry peers.
I think the market around cars is currently obsessed with all of these Chinese cars that are coming in and how they're taking market shares. We Buy Cars has nothing to do with all of that. In fact, they enjoy more variety so long as you can price these things. And what's happening is their market is actually growing. When you put together new and used vehicle markets, it's the used that's growing because people are keeping their cars a little bit longer or trading them. So I think this is one business that will see volume growth over the medium term as they invest in parking bays. I know everyone talks about the multiple and everything, but just remember there were new shares issued and everything. It's not as expensive as it looks. So I think this is one. There's very few companies that you can see growing volumes and earnings the way they are projected to grow over the next few years. So that's my stock pick for today.
They have a significant stake in Harmony, which now makes up around 50% of the net asset value of the group and the market cap, in fact. And then a number of key other bulk commodity assets and some platinum assets. So it's trading at a significant discount to the sum of its parts. We do think the parts of the commodity cycle are quite depressed, but we don't think the trade will be as bad as has been anticipated, and global growth will continue, which will improve the commodity cycle, and you're getting sort of value in the absolute basket of assets that they have at these levels. So it does look quite attractive here.
So Rowan going with ARM and Roy going with We Buy Cars. Just your analysis on those counters. Do you like them?
We Buy Cars is a very good, it has been great in your portfolios for the past year or two. And he does raise a very good point, as the Chinese fear comes into the motor industry, it is a great place to benefit from that influx, because, as he says, everyone is not buying new cars right now and they're buying secondhand, and that's where a lot of people are getting theirs. And in terms of ARM, it has been oversold quite aggressively, and I think that there is some upside to it, especially if you look at the Harmony element of it.
But those counters not your stock pick. Where are you seeing opportunity today, Odwa?
Well, I'm still defensive in this environment, and I'm going with Bidcorp. Bidcorp has shown some very stellar results in their last print, and they're well diversified across the globe, 33 countries, and their balance sheet is still looking quite well at this point, and reasonably, the valuations are quite attractive as well. So I think that because of that and the strategic push right now to try and get more distribution centers across the 30 other countries is quite good for them. And I think that they're well positioned, and that's why I'm going with them.
Bidcorp, one to look out for. Odwa, thanks so much for your time and sharing your insights this afternoon. That was Odwa Magwentshu from Momentum Securities.